Well, the new capital gains tax increase sparked the highest number of commercial real estate transactions for June in a decade. Owners dumped their assets before the new increase came into effect. The CEO of Colliers Canada says this new tax is just another hurdle for investment in Canada. Rosen is the president and CEO of Colliers Canada, and he joins me now. Thanks so much for joining me.
Thanks for having me today.
So we were wondering if it was showing up in the stock market, but you're sort of on the ground understanding what's happening with these physical assets, all commercial properties. Tell me exactly what you saw.
Yeah, so the tax change that's been proposed by the federal budget and will go into effect as of June 25th, as you were mentioning, we don't really think it's a great idea for Canada's competitiveness in the grand scheme, because it adds another burden, another cost compared to the U.S., which is really the market that gets compared to when you see investment into Canada. But it did spark a flurry of transactions as investors really tried to take some deals that had been languishing for a long time, get them through, because then they wouldn't have to pay the extra, really 7 to 9%. That would be the charge, depending on the province.
So were these deals that were contemplated already? They found a buyer, and it was just an acceleration to close? Yeah,
a lot of them. They did a cost-benefit analysis and said, if we take the price we have a bird in hand right now, what would be the change if they waited around for another 6, 8, 9 months and then sold it, knowing that their costs would increase by anywhere from 7 to 9%, depending on the province. So we saw a lot of activity in the private space. Institutional investors have a much longer horizon from a time perspective, and so they didn't really feel that urgency, that need. A lot of private buyers wanted to take the cash, did that quick NPV in that analysis.
And were there fire sale prices, or? No,
there wasn't. It wasn't a fire sale because there is a bid-ask spread. There is a gap between right now still buyers and sellers and their expectations. It's not dramatically apart. It's far enough to create still some stall in the market. So it just was a matter of closing that gap a little bit. No one was pressured where they had to take money, just absolutely needed to sell. Some of those sales may happen through distress. But that's a little bit different than this. This was optional.
As you mentioned, it's kind of not death by a thousand cuts, but this is just one sort of headwind that is facing the sector. You've got a number of companies that are out there trying to sell buildings, right-size their assets. Any signs of improvement, stabilization? What can you tell us about, commercial, particularly office right now?
Yeah, so on the positive side, we saw a rate cut. There's anticipation that there's going to be more rate cuts. Some of the news coming out of the U.S., and we don't want to deviate too far from the U.S. in terms of what the Fed is doing there, indicates signaling rate cuts there. So that gives optimism that there will be reduced lending costs. That will generate both construction, development, things like that, as well as more stabilization of the market. On the flip side of that, they're still waiting out to see where is everything going to land. So while June provided some necessary comps, which is what the market has been really, really looking for, could that activate the market? Potentially, because now you can point to some actual sales prices, and this is where the market's at. On the other hand, a lot of investors look at it and go, okay, that was just a June spike. So I think we need a couple more months of activity just to see where things are going.
What's the scuttlebutt on private equity interest? I mean, we saw it in a residential deal. We saw it in cemeteries. But nobody really seems to be really going out into the deep end, into office, for example. What do you hear about private equity interest?
Yeah, private equity, or just private capital in general, has been probably more active, I would say, than the institutional. So the life cos, the pension funds, they're sitting on it, and they own a lot of the major downtown office that we see.
And not interested in selling.
And they're just not interested in trading right now because they can wait it out. And we saw that 5, 6, 7 years ago with retail, where a lot of the major retail assets, the cap rates didn't move tremendously because there just wasn't a lot of trading going on. People were willing to wait it out, the pension funds, in order to reposition assets, go through different life cycles. So there is interest on the private side to move quicker, and private usually is the first into the market. We did see the big, large private equity from the U.S. transaction that Colliers helped put together with the MHC portfolio being purchased from a REIT. So that does signal there is interest from private capital in the market.